Let's get to Bloomberg's Michael McKee with that Fed rate decision.
The most divided Fed since before the pandemic voted to lower the benchmark rate by 25 basis points as investors expected. But there were 3 dissents for the first time since 2019. And on the dot plot, a total of 6 members of the committee suggested they were not in favor of lowering rates. There's also a hawkish line in the statement. In considering the extent and timing of additional adjustments to the target range, bringing back language from a year ago when they paused their first round of rate cuts. No surprise, Stephen Myron wanted a half-point reduction, but in something of a surprise, Austin Goolsbee joined Jeffrey Schmidt in dissenting for no cut at all. Next year's dot plot suggests just 1 cut coming. 7 members want no move, however, including 3 who think the rate might go up. The committee statement says economic activity has been expanding at a moderate pace, and the latest forecasts show a consensus GDP figure of 1.7% for this year. But in a big move up, they have revised growth forecast for 2026 to 2.3%. Unemployment forecast to finish this year at 4.5% will fall back to 4.4% next year. Using identical language from October, the statement says job gains have slowed this year and the unemployment rate has edged up through September. Nodding to the government shutdown-caused absence of data, the statement repeats that more recent indicators are consistent with these developments. There's no change in the inflation assessment. It has moved up since earlier in the year and remains somewhat elevated. However, it is seen slowing markedly next year. PCE headline from 2.9% this year to 2.4% in 2026. And as always, they won't reach their 2% target for 2 more years in 2028. Core PCE will finish the year at 3%, falling to 2.5% next year. As for the balance sheet, the statement now says reserve balances have declined to ample levels. The Fed will buy shorter-term treasuries, mostly bills, but up to 3-year notes, as needed to maintain that ample supply. The first operation will be announced tomorrow, with the first purchases on Friday of approximately $40 billion in Treasury bills.